Hello, hello. So in this video, I would like to do something a little bit special, a little bit particular. I would like to go through an investment product, the fact sheet of an investment product, to analyze it and analyze it critically. That means that we will see which informations are given, which informations are important, how to analyze the information that it's given, and then how to basically draw a decision. This methodology, I believe, can be applied to various investment products. So anytime that you incur into someone that proposes you an investment, you can just ask for the fact sheet, which is usually given, and then you can go through with the methodology that we are going to use today together and analyze the investment yourself and then make a decision yourself. This is a very interesting investment product that I've incurred in. I've incurred it by side paths, but somehow I got my eyes on this investment product. Don't get scared about the thing that you see here. So half of the screen is the translated fact sheet because it was only in German. I could only find it in German. So I translated it with DeepL. I just put the entire document and I translated it. And on the right side, we have the German version. So that the German version is the real one, so it's the official one. The English version is just a kind of bad translation of the German version. So when there are doubts, I will just show both, and I will tell you in German where the information is given. I would just start right away, and then I would not talk to you about the investment because we will go through the whole fact sheet and you will learn about the investment. So let's just start by the title. Usually when you find an investment product, you again go on the fact sheet and big at the top they have the name of the investment product, and that already tells you a lot of information actually. Usually they put good information into the titles. So for example, I don't know, if you look at the iShares SWDA, which is an ETF replicating the MSCI World. It's named iShares, MSCI World, and I think ACC. And that already gives a lot of information. So iShares, it's the provider, it's the issuer of the ETF. MSCI World is the index that it tracks. ACC means accumulating. So there is already a lot of information. The same thing, almost the same thing happens here. Now, some other times you could find some kind of bullshit into the name just to make it bigger or to make it more interesting or appealing. But I wouldn't say this is actually the case here, because we have Smart Alpha, and then we have AMC, and then in brackets we have AI. So Smart Alpha, I don't know what that is at this point. Now, I already read all the fact sheet. You can see here there are my notes. These are my notes. So I know that Smart Alpha is actually, if I remember correctly, it's the issuer of the fund, of the product, sorry, not the fund, sorry, the product. And then we have AMC. AMC stands for Actively Managed Certificate. So this is a certificate. We will talk about that specifically a little bit later. And then in brackets, we have AI. So it's an investment product issued by probably Smart Alpha, which is structured using actively managed certificates. And the actively managed part is managed with AI, so artificial intelligence. Then we have the subtitle that says that it's fully automated. That means there is no people involved, I guess. So probably some people coded the strategy and then they just started it. And that's fully automated. There is no other person touching the 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 the, the investment. So the decisions made into this certificate are not touched by humans because it's fully, so entirely automated. Now that's already a little bit hard to believe that it's completely and fully automated. Maybe a better word would be highly automated, because sometimes you will make some changes, I guess. Liquid, so it's liquid, I guess. It's hard to believe, I think, because we will see a little bit later that, as far as I understood, this is not an investment product that it's quoted on any exchange. So it's very difficult to believe that liquid is a good objective for this investment product. But liquid is very relative, so it might as well be liquid for the person that made this investment product. But yeah, I will not be too harsh, because, as I said, I want to analyze this critically. So every word written in this fact sheet will be analyzed. The meaning of the words, when it's possible, I will try to explain it, and also I will try to explain the information that I need. Then we have absolute return, which I didn't actually know what they meant by absolute return. Absolute rendite, as you can see here. So I went on their website, but if you read the fact sheet as well, it's kind of explained. They just mean that that it's a positive return year over year. So that means every year we are expected to have a positive return. And then that's basically it. Under here, it's written product information, so it's nothing important. Okay, let's go. Let's try. Okay, here we see AI trading strategy. So the guess that it was based on AI was correct. This is a trading strategy based on AI. Onvest Asset Management. So this is the company that packaged this investment product. We will see later what exactly the company structure is. What are the companies involved? Let's say. And then let's go also here in German. And then here we have the first important information. So it's important to read everything. So also the fine prints. So yeah, let's read it together. The financial product mentioned in this document are derivative financial instruments. Okay. They do not qualify as units of collective investments schemes within the meaning of Article 7 of the Swiss Federal Act on collective investments schemes, and are neither registered nor supervised by the Swiss Financial Market Supervisory Authority, also called FINMA. Investors do not enjoy the specific investor protection offered by the collective investment schemes. Good. I read that also in German to check if the meaning was the same, and it is the same. So basically, this sentence indicates that this is not a fund. So before I said fund by accident, this is not a fund. This is a product. It's a contract between an investor and a provider of the contract. So this is not a fund. It's very different from a fund. When you invest in a fund, you give the money to the fund, whether it is a closed fund, open fund, actively managed or passively managed, doesn't matter. If it's a fund or a how it's called, collective investment schemes, which just means funds for the friends, you just give the money to the fund, and then they take the money, and with your money they buy shares of things. So they could buy shares of companies, or could buy shares of commodities, or they could buy anything, basic bonds or whatever. But they do buy it, and when they buy it, they keep it, and they keep it in a separate account. And those assets are yours. So the fund bought it for you with their strategy, with what they thought was better, but they are yours. So they just bought it for you. You are entitled to those assets. If the fund manager should go bankrupt, you still have those assets. In this case, it's quite the different. So it's not a fund, it's a contract. So you have a direct contract with this company, you give them money, and the contract just says what they are supposed to do with your money, and where you have benefits and where you could have maluses, and that's basically it. This just means that if the counterpart of this contract, so the company that you do this contract with, goes bankrupt. The contract becomes worthless, and you simply lose your money in simple terms. So it's very important. An example of a contract are the simple certificates. So certificates, for example, I don't know if maybe you already heard of them, but let's say, for example, a bank wants to develop a certificate where they say, I don't know, if Apple goes above $300 per share on the stock market, I will give you $1,000, and if Apple goes below $50 per share, you have to give me $50. So that this is a stupid example. I don't believe there is any certificate just like that, but those are certificates. It's just a contract. It's a kind of a bet. We do this thing, we do this agreement, and if something happens to an asset, then we exchange a sum of money. But we don't influence how that asset works. So we don't influence the asset going up or going down. We just look at what the asset is doing, and then we exchange money based on our agreement. So that's kind of how that works. On the contrary, when you invest in a fund, as I said, they take your money and they buy stocks of Apple on the stock market, and therefore they do influence the market. And you really have the share, they keep the share, and you are entitled to those assets. So that's very important to understand. Okay. And also, what this says is that where is it? And are neither registered nor supervised by the FINMA. So that means that this investment product is not supervised, not registered with FINMA. So there is no protection with any financial authority. And this is quite normal. This is one reason why contracts or certificates are easier to deal with, because they have much less regulatory problems. Okay, let's go further. Now we start really to dig deep into the contract, into the fact sheet. Sorry. So let's read a little bit. I would say let's start from this part. So I have to remove some of my notes. Okay, so here we have again fully automated trading system. I already explained that. That just means that it's completely automated. So at least based on what they say, they do not expect to use any human intervention. And then we have ability to achieve absolute returns regardless of market conditions. So that means positive return year over year. So every year they should have a positive return. But the problem is that this is a strong claim. It's a very strong claim, and for that I really need a proof. So I'm expected to find some proof in this fact sheet. And mind you, I went on the website of the company. This is the only information about the product that they give. So I could not find any other information. So if I decide to invest in this product, I have to base my decision on this. Or I could call the company, maybe. But yeah, if I don't want to do that, or I cannot do that because maybe they don't answer me, I have to base all my decision on this fact sheet. Okay, so as I said, I need some proof. So I expect to find some proof later on. Then we have daily liquidity. Again, I need to understand who provides this liquidity, because as far as I understood, this is not going to be quoted on any stock exchange, because it's also written here. And then we have ideal for supplying conventional portfolios and improving portfolio risk adjusted return. Okay, this is again a claim that they say could be, could not be, I don't know. Okay, how to invest in this product? So this product, Smart Alpha AMC AI, can be purchased through any bank, quoting ISIN CH blah blah blah, or security number, and the desired investment amount. So you have to go through a bank You cannot buy it on, at least as far as I understand, you cannot buy it on a stock exchange or any type of exchange, as a matter of fact. Okay. Um, this is quite common for certificates. Many certificates are dealt with privately or over the counter. They are not really dealt with a centralized exchange. So it's nothing special, but it just um, questions the liquidity of this investment because first of all, it's a Swiss investment. So I'm mm, I'm not I don't think that other Europeans could get into this investment. Well, first of all, it's only for institutions. So, okay, maybe some institutionals, European institutions could get into this investment, but as I said, if you say it's liquid, you need to tell me why you say that it's liquid so that I can prove whether you are right or wrong. Okay, but let's not stuck our heads into this. Let's go further. ISIN number, okay. Valor number, which is the security number in Switzerland. It's this one, okay. Issue price is going to be 1,000 francs per share or per certificate. The product manager is Onvest AG, the company that markets and sells the product in Switzerland. This is it. So they just packaged the product to give it to the Swiss market. And then we have the strategy advisor, which is Smart Markets GmbH. So this is basically the company that developed the strategy. And then we have the issuer, so the issuer of the contract, of the certificate, which is Smart Alpha Ltd. Now we do understand why it's called Smart Alpha AMC AI. Smart Alpha, it's the issuer of the actively managed certificate based on a trading strategy using AI. And then the CFD broker is Finalto. It's also written here. Maybe here it's a bit easier to read. It's Finalto Financial Services Ltd. And then we have a management fees of 0.45%. Then we have a performance fee of 25%, an administrative fee of 0.25%. Overall, when we look at the fee structure, we have total fees of 0.7% per year on the value of the invested capital, or on the value of the capital, sorry, on the value of the asset. If it's revalued every year and you gain some money, then of course you're going to pay 0.7% of that amount. And then we have 25% of performance fee when the performance is positive, of course. So if you make, I don't know, 100% of profits, 25% is taken off as fees. Okay, so with this fee structure, because there is this 25% of performance fee, we have to understand the impact of that 25%. So that 25% translates into this. So after a minus 10%, because of this 25%, one needs 13% to get back to zero. If it were if there was no performance fee, you would need more or less 11% to get back to zero. And after a minus 15%, then the next year you need 25% to get back to zero. That's a bit of the fee structure. There is no entry nor exit fees as far as it's written here. So that's always good. And then there is also a distribution fee if there should be any distribution of maximum 2%. Then we have an investment amount, a minimum investment amount of 10,000 francs. So you cannot invest less than 10,000 francs. And you can invest daily. And then we have also the information that this product is only available to professional and institutional investors. So that means funds or hedge funds or investors like that, or if you are categorized as a professional investor. So that's also a possibility. I'm not sure what happens if you go to your financial advisor in a bank and you ask to buy this product. I'm not sure if you can buy it, but I guess the financial advisor could tell you. I hope so, at least. Now, the thing with these companies, so we saw that there is a product manager on Vestagate, there is a strategy advisor, which is Smart Markets GmbH, and then there is an issuer, which is Alpha Ltd, and then there is a CFD broker, which is Finalto Financial Services Ltd. Now we have to understand what are these companies, because, well, if I buy an ETF, there is usually only iShares, Vanguard, and that's it, usually, and they directly buy the stocks. But here we have a product manager, strategy advisor, an issuer, a safety broker. So there is a lot going on, and we have to understand what are these companies, what they do, what is their credibility, and so on. So when it comes to Onvestagate, this is again, as I said, a company that packages this product and sells it in Switzerland. That they are regulated by FINMA. We will check it a little bit later, and they are a Swiss company. When it comes to Smart Markets GmbH, I'm not sure. I did some research. I think they are a German company. I am 99.9% sure that they are not a Swiss company, because they are not registered on the company register of Switzerland. So if you go on if you type on Google company register Switzerland, you will go into a portal where you can put the name of a company and see if they are registered. So they are not registered in Switzerland, at least not with this name. So I guess they are a German company, because if they are not Swiss and they say GmbH, they are probably German. And also I found the company, a company name like this in Germany, dealing with these type of products. And then we have the issuer, which is Smart Alpha Ltd. For Smart Alpha Ltd, I could not find much information. I think that they are a UK company, but when I tried to search for it on the UK register of companies, I see that they dissolved in 2019. So I'm guessing that's not the company. If you go on their website, they say that the website is in maintenance. I'm guessing that's not the company, but then I ask myself, what is the company? Hello everyone, it's Dario from the future, and the video that you're seeing was recorded about a month ago, and at that time I didn't find this information here, this document here that you're seeing on my screen. So in this document, I find a little bit more information on the company, the issuer, and also on the investable universe. So when it comes to the issuer, Smart Alpha Ltd, it's here written that it's in Guernsey. I saw, and Guernsey should be under the jurisdiction of the United Kingdom. Now I'm not sure if that also means that the company should be present on the trade register or the company register of the United Kingdom, because if that would be the case, then on the trade register of the United Kingdom, I see dissolved. But I couldn't find the trade register of Guernsey. What it's also important to say is that here it's stated that it's not licensed or registered in Guernsey by the Guernsey Financial Services Commission, or registered or authorized by the Guernsey Financial Services Commission as a collective investment scheme. So yes, still not regulated, not registered by any financial commission. So yes, probably the company is still alive. I'm just not sure why it would say dissolved in the United Kingdom. Maybe it's because they moved in Guernsey and I cannot access the trade register of Guernsey. When it comes to the investable market, so the investable universe, sorry, the investment universe, it's not like they state more than what was already present in the fact sheet. Alternative investment, fixed income, commodities, forex, and equities. But they can invest from 0 to 100% in those asset classes. That means they can do basically whatever they want. But yeah, That's all I had to say. Thank you. If they write LTD, well, they could also be Swiss, I think, if they translate their names, but I don't see why you should write AG here and then LTD here. So I'm guessing they are either from the UK or from the USA, but this is only a guess. Unfortunately, I could not find much information. When it comes to the CFD broker, I did find information on Finalto Financial Services. They are kind of known CFD broker, not really big, I think, because well, it's the first time that I hear from them, but they established in 2008. You can go on Bloomberg.com and there is a small description of what they do. Basically, they provide CFDs. So CFDs are, I didn't talk about this, but they are contracts for difference. So basically, again, it's another derivative. It's again a contract, and it's kind of a let's say a bet. It's a contract where you say if the stock does plus 10%, you give me 10%. If the stock does minus 5%, I give you 5%. So it's just like that. It's a way of tracking the performance of a financial instrument of a stock, for example, without buying the stock. Again, it's just a contract, so you don't influence the markets by using CFDs. And if Finalto Financial Services should go bankrupt, the contract becomes worthless and you don't get back your money. So this is important to understand. And the contracts that are bought with this strategy, so the strategy uses CFDs, they don't buy stocks, they don't buy commodities, they don't buy currencies, they buy contracts for difference, CFDs, that should replicate the performance of those underlyings. Okay, and this is the broker with which we conclude, or the manager concludes of the product concludes the contracts. Okay, so this is a little bit an introduction on the companies. We will probably dive a little bit more deep on these companies at the end. Good. Then let's go to this sentence. By investing in Smart Alpha AMC, investors gain access to a liquid, long-short equity, forex, and commodity portfolio managed by a proprietary CFD trading strategy. So, first of all, they say that they also use short selling. When you use short selling, that means selling something that you don't own. To do that, you borrow, but when it comes to CFDs, there is not much to borrow. You just do a contract with someone where you say if the stock does minus 10%, you give me 10%. Okay, so when that happens, basically when you do short selling, this applies to also normal stocks. You increase the risks when you are wrong. This is also because basically you have an infinite possibility of the stock or the underlying increasing, but a limited possibility of the underlying decreasing. And also when the stock increases, therefore you are wrong, because if you short, that means that you want to gain profit when the underlying goes down. So when you short and the underlying goes up, then you increase your position. So your position becomes bigger and bigger, because from 100 it goes to 200 and 300 and 400. So the number goes bigger, and that number in comparison to the whole portfolio that you manage gets a larger portion. So maybe it starts at 10%. So if the stock or the underlying is at 100, so you invest that 100 to be able to short it, and you block that 100. So then you have, let's say, 1,000 for the whole portfolio, then that's 10% of your portfolio. If it goes to 200, then you have to block $200 or francs or whatever, and that goes to 200 over an entire portfolio value of 1,000, and that just means that now you have 20% of the of the portfolio invested into this short position. Okay, and that applies to forex, so currency trading, commodities, and I think also stocks. It's written, yeah, equity, exactly. Okay, via proprietary, so it's proprietary, so that means that it's a trading strategy owned by someone, not sold. So it's not possible uh, to do it yourself. I mean, it's as I said, it's proprietary. They developed it. CFD trading strategy. So that just again tells us that they use CFDs. Okay, so let's go through a little bit of the intermediary structure. The intermediary structure is important because you have to understand whom you are dealing with and what happens when something happens to these institutions. Okay, so first of all, we have the company issuing the stock. So when you invest in a stock, you just have the risk of that company doing something bad and then the stock goes down, and that's your risk. So first of all, you always have that company issuing the stock, and that's a part of the risk. And then under that, we have immediately the financial institution issuing the CFD. So that means that the financial institution issues a CFD with an underlying stock, for example. So you have the fluctuation of the stock due to the fluctuating financials or the expectations of the company. And then these fluctuations are reflected with this contract to you through the financial institution that issues these CFDs. And it's important to understand that, again, this is a contract. Therefore, if the financial institution issuing the CFD should go bankrupt, then the CFD becomes worthless. And therefore, you lose your money. If the company issuing the stock goes bankrupt, again, you lose your money. This is just normal. If you buy a stock and the company goes bankrupt, the stock doesn't, it's worthless, you lose your money. If the financial institution issuing the CFD goes bankrupt, you lose your money. And then on top of that, we have a financial institution buying the CFD and using the CFD to build this certificate, so the Smart Alpha AMC, actively managed certificate. And if that company should go bankrupt, then you also lose your money. And then there is you that buys this product. So that means that if Finalto Financial, so first of all, that means that if the companies issuing the stocks with which the CFDs are built on go bankrupt, you lose your money. And that's true even if you invest in, I don't know, the S&P 500. If the companies in the S&P 500 go bankrupt, you lose your money. Then there is Finalto Financial Services issuing the CFDs. If they should go bankrupt, you lose your money. And then there is Smart Alpha Ltd, the issuer of this financial product. If they go bankrupt, you lose your money. Okay, we have a three-layer intermediary structure, and normally, you have only two. Only company issuing the stock, and then you. Even if you buy ETFs, or if you buy funds, because the fund is just a bridge between you and the stock, but they cannot use your money if they go bankrupt or if they have financial problems. And that's also why I didn't put Onvest AG in here, because they are just the intermediary selling or packaging the product. But that doesn't mean that if they should go bankrupt, you still have this contract with the issuer, so you can get back your money. And the same applies to a fund. If the fund should go bankrupt, nothing happens. You still have those assets. You just have to wait for the assets to be sold, the money to be given back, but you still have that money. Okay, so this is a little bit of the risk structure. As I said, usually you only have one intermediary, which is the company issuing the stock, and that's it. Or the government issuing the bond, or the company issuing the bond, or whatever. The company issuing the underlying. or the institution issuing the underlying, let's say in that way. Then the structure of the products is one third equities, one third currencies, and one third commodities. So more or less, they use this trading distribution. Now I also ask myself, okay, but what does that mean that you force yourself to always have one third in currency exposure, direct currency exposure, so forex exposure, and one third in commodities and one third in equities? Or if somehow your training system tells you that equities are better, you just go fully or almost fully on equities? Because as it is here, it kind of seems that they are forcing themselves to be 30, 33%, 33%, 33% always. Yeah. And also what I want to understand is, do you count the currencies in which the stocks are quoted as currency exposure, or do you only count the pairs, the forex pairs, the currency pairs that you trade in this 33%? But that's not really explained too well. So about currencies usually don't give a positive return because they align with inflation and interest rates, especially when it comes to CFDs. When it comes to CFDs, you will pay or you will get the difference in interest rates. So yeah, that's basically how it works. So it's not free to trade currencies. Yeah, because of these aspects, it's really not that they give a positive return, especially if you use CFDs. And if you don't use CFDs, then they have a very small margin because they don't fluctuate that much, and so you have to uh, to put a lot of money into currencies. You could use futures to trade currencies, but usually they don't really have a positive return and they are used to hedge risks instead of really making profits. But okay, that's what they do. It's perfectly okay. They're entitled to use currency trading if they want. And here they mention also 100% Swiss francs. That means that CFDs are all in francs, but it doesn't really mean that there is no underlying exposure on other currencies. So if they should buy a CFD that replicates the performance of Apple and Apple is traded in US dollars, unless they hedge the currency risk of dollars to Swiss francs, then I don't really, it doesn't mean that they are not exposed to other currencies. So I guess this means that only the CFDs are, the contracts are concluded in Swiss francs, but they still have currency risks. Probably, again, because this is not really well explained. Also, until now, I still didn't see any overall investment universe. So, yeah, they say equity and forex and commodities, just basically the entire investable market. So they don't say, for example, equity but only United States, or equity but only Europe, or only major currency pairs, or only gold and silver. They just say commodities. Okay, they say currencies, but they don't say which ones, and they say equity, but they don't mention any in specific. So I guess that just means that they invest in everything, which is perfectly fine. But also the problem is that I don't see any benchmarks. So um, the reason why I would like to see at least the investable universe, better a benchmark, is because I have to then compare the performances of this investment to a comparable alternative, and then see if they make sense. So if the risks are better or the same, and if the performances are better or the same, and so on. So if I had a benchmark, for example, I could try to replicate that benchmark with an ETF or multiple ETFs. or if I had an investment universe, I could try to create a benchmark on my own, but that's not possible because they don't really mention it. Okay, let's go further. We are at halfway through. Okay, here let's see this information. Smart Alpha is a fully automated model trend following trading system. So trend following, this is an important aspect. Trading system that opens both long and short positions in equity. So this is something that we already read. The only new information is trend following. Trend following means that it makes money when there is a trend, either upwards or downwards. If they use short selling, they can also profit when it goes down, but they need a trend. That means that they cannot make, or at least if they say that it's trend following, that means they cannot make money when there is a sideways or horizontal or stagnant market. Stagnant market is just, I don't know if I draw here. So let's say this is the market. It goes so here. I'm not really good at drawing, but if the market goes like this is an upward trend, and then let's say the market starts doing this, then it goes down, and then it goes and then it goes upwards. Okay, this part here that you see here, this is a sideways market. So this is an upward trend. This entire thing, it's an upward trend. Then this thing here, it's downward, and then this one is upward, and this here in the middle is sideways. Well, they can make money in this phase, this phase, but they cannot make money in this phase here. And if we go back, let me delete some things. And if we go back to this claim here, where is it? uh, Ability to achieve absolute returns regardless of market conditions. So regardless of market conditions, that's not really true, because if the market condition is of a sideways market, they cannot make money by definition. So that based on what they say two contradicting statements. Okay, the AI trading system includes strict risk parameters, and each trade is initiated with a clearly defined stop loss and take profit target to limit the overall risk. This is very, very good, of course, because especially if you're short selling, you need to put a stop loss because your losses could get really, really important. So it's good to have stop losses. And I also expect to have risk parameters, obviously. So this is perfectly okay. The only nuance is that stop losses do not really guarantee a price. And when you're short selling, even if you're buying long, doesn't matter. If you put a stop loss, it just tells the computer, so the broker, to sell the security whenever a certain price is reached. And when they sell the security, they sell it on market, so on market price. So that just means put a market order as soon as the price hits a certain target. And because it's a market order, if there should be a lot of volatility and there should be gaps, then they could incur losses greater than what expected. This is just like stop losses work. There's no way to get around this. And then we have Smart Alpha AMC, has a low correlation to the overall market and the ability to be profitable in different market conditions. For this statement, I need a proof. I need a numerical proof to tell me that that has a low correlation. So I'm expecting to find a correlation matrix to the overall market or different markets. So it could be the commodity market, and maybe you could put in some commodities. Now it's hard to do this if you don't say what your investment universe is, but yeah, I want to see this correlation matrix. And then I also want to see a proof that it's profitable in different market conditions. So I'm expecting to find that later on. Okay, and then we have Smart Alpha AMC trades are based exclusively on statistical analysis and probabilities and are designed for a medium-term holding period which can last from a few hours to a few weeks. Okay, first statement, exclusively on statistical analysis and probabilities. Okay, but do they use fundamental indicators? Do they use price indicators? Do they use news? Statistical analysis on what information exactly? Because you could do statistical analysis on multiple things. You could do, I don't know, statistical analysis on how much the price goes up when it rains in Bern. How much Apple goes up when it rains in Bern. So you could do a statistical analysis on that, find the probabilities of going up more than 5% when it rains in Bern, and then say that when the forecast says that it's gonna rain in 2 days in Bern, I just buy and then hold for a few days and then I sell. You could do a statistical analysis on that. It's perfectly fine. But when you tell me that it's based exclusively on statistical analysis and probabilities, I'm expecting to also that you also tell me what information you are going to use to do this statistical analysis, especially when you want to use different things. And so, are you going to do a statistical analysis on anything? Are you going to find correlations on anything? Or on specific aspects? Are you going to look only at the prices and maybe at volumes, or do you also use the fundamental indicators, so the earnings and the profits and the revenues and or news, so political news maybe, um, and so on. So, but that's not given. And are designed for a medium term, which can last from a few hours to a few days. That means that it's a medium intense trading activity. There is trading activities that are much more intense, such as, for example, high frequency trading. So this is not really intense, but I'm going to ask if the 0.45% fee, the 0.45% fee is the management fee. So I'm expecting, because they differentiated between administration fee and management fee, I'm expecting the management fee to only include the costs of managing the product. That means buying and selling the CFDs. So I'm gonna ask, is the 0.45% fee realistic? Because it seems a little bit high. So buying stocks is expensive. Buying CFDs is much less expensive than buying stocks. And even to buy stocks, 0.45 is really high. It's really high because if you think of an ETF, they have fees that go from 0.05% to 0.22%. And they buy stocks, so they really buy stocks. And in those fees, they also include the wages of the people working there. I'm expecting the wages to be included in the administration fee. Is it realistic or is it a little bit high? But okay, the average holding period is a few days. Okay, that it's fine. I mean, it doesn't tell me much. It's okay. It's a short-term trading activity. It's fine. Smart Alpha AMC aims to provide investors with absolute positive returns each year. We already saw what that means previously. Significantly outperforming other assets classes such as equities and bonds. This is a very strong claim, needs proof, so I'm expecting to find proof later on. If I don't find proof, that's a big no-no for me. But also, it tells me significantly outperforming. What do you mean significantly outperforming? I want to see a table where you show me the performances of equities, for example, because you said that as an example. So I want to see equities, and then I want to see your product. And they have to be comparable. So you have to tell me that your product has an investment universe of these types of stocks, and you compare it to another one, and then you tell me that it's significantly outperforming, and then it's fine. You should not even tell me that it's significantly outperforming. You can just say outperforming. If it's more than if the difference is positive and more than zero, then it's outperforming, so it's fine. But you have to tell me. Then I decide if it's significant or not, because significant is subjective. But okay, then let's go further. Artificial intelligence. Smart Alpha AMC is not only has the ability to be profitable in different market conditions, but also continuously adjusts the trading parameters to changing market conditions. Just a statement, it's fine. Usually that's also what happens with any trading strategy. If you ask a hedge fund, they will continuously adjust the trading parameters to changing market conditions. It's a very normal thing to do. The Smart Alpha AMC algorithm, which is based on artificial intelligence and machine learning, continuously adapts trade sizes as well as stop losses and take profit levels. Now, this is just a thing that I noticed. There is not really a correlation between AI and adjusting trade sizes. The statement is not false. It's perfectly fine that the AI algorithm adjusts trade sizes, but the trade sizes are adjusted normally. So I also adjust my trade sizes based on how much money I want to invest in stocks and how much money I want to invest in bonds. Any strategy would adjust trade sizes and the stop loss and take profit levels. It's not a matter of having AI, but yeah, the statement is not false. It's a little bit misleading because it almost tells that it's thanks to the fact that it's based on AI that it can adapt the trade sizes and stop loss and take profit levels, which is not the case. It's not because of AI. It's certainly thanks to AI that they adapt in that way, but it's not a perfect correlation. Okay, then we have Smart Alpha is therefore ideally positioned to replicate historical results also in the future and offer investors an attractive risk-adjusted return. First of all, they say position to replicate historical results. This is it's okay for marketing. I understand it from a marketing point of view, but later on in the disclosures, we will see that, as always, they indicate that a previous past results are not indication of future profits. Put it so much in evidence and tell me that it's ideally positioned to replicate historical results. It's a little bit of a red flag. Why do you need to say that when we know for a fact that past performance is not a guarantee for future returns? But okay, it offers investors an attractive risk-adjusted return. Attractive risk-adjusted returns needs to be put into measurable scale, a number. So I'm expecting later on, we are almost done, and I'm continually saying later on. I know for a fact, because I read the entire thing, that all of this information that I'm requesting, it's not going to be given in the fact sheet. But every time you do a statement like that, every time you put a subjective measure, you need to tell me what is the measurable scale and the numbers so that I can decide whether or not it is attractive to me. This is really important. Finally, we get some numbers, historical performance. Let's see a little bit this table. So we have 2020, 2021, 2022, 2023, and the first quarter of 2024. We have here broken down in quarters and then the final year. Let's just concentrate on the final year. I don't care much about the quarters. This is really an insignificant amount of data. After all those claims that I saw before, I was really expecting to see some good data, some good back testing. I don't need to see the strategy because, of course, the strategy is proprietary. I do understand that they cannot show me exactly how they buy and sell things, but at least show me a little bit of historical performance, historical analysis. But that's not given. It's just given these 4 years and a quarter, which is again insignificant. So my questions would be: did they do more backtesting, or so is it just that they decided to put only these years into the fact sheet? But I don't understand why they would put only on these years. So I don't think there is much effort to put some other rows and the results that they got. So if they did backtesting on more years. And then I also want to know what is the data set. So again, there is no need for you to tell me the strategy, but tell me what is the set of data? Are you using US stocks? Did you use what currencies did you use? Did you use any? So at some point you have to decide something because you cannot just invest in anything. So I'm finding it hard for a system to have information on anything that is investable in any way, even the stock that is traded only in Bangladesh. So yeah, you have to give me the set of data. I want to see the set of data. And maybe it would also be nice to if you give me the provider of this data so I can understand if the provider is reliable because it's not always easy to find the data for many things. Sometimes you have to pay, sometimes you pay, but the provider is not really reliable and the data is not much useful, or you have to clean the data and so on. And then I also want to know if they performed blind tests. So blind tests would be, for example, when you build a trading strategy, you usually take a set of data and then you build your strategy on that data. So you try the strategy, you see that it doesn't work, you try to adjust some aspects. You always try to adjust some aspects, not to make money in that market condition, because then that market condition is going to change, and then you are going to be making losses. But you try to adjust the system. And then what you do is you take another set of data that the system never saw, and then you try a blind test. If it works, perfect. You have the proof that it works in another market condition other than the one you have been building your trading system on. If it doesn't, then you need to adjust the trading system and use another blind test, another set of data to do your blind test. And then I also want to know maybe if they use simulated random data, so data that never existed, but that it's been of course, correctly simulated, maybe with a Monte Carlo simulation that uses past data as a let's say as a DNA to build random data. So that would also be nice to know. That's not given, so those would be my questions. And then we have here the performances. The most important, I would say, is the growth rate, so the compounded annual growth rate. And then, so with these performances, what we can do is a plausibility analysis. So it's a big name to just say to check whether or not the claim of 23.6% is plausible in our realm of investment returns. So what does it mean to have a 23.6% return? It just means that 100,000 francs invested today become 1 million francs in 10 years. Whereas with a traditional investment in stocks, which are the most profitable investment assets, the most profitable and less risky investment assets, it would take 30 years. Of course, probably cryptos are more profitable, but they are also a lot more risky and they have much less history to prove their performances. But yeah, with a traditional investment, it takes about 30 years. So it's not out of the probable realm because 10 years, it's to do 10 times your initial investment is, I wouldn't say it's fine. It's a bit of a strong claim, but let's say it's not 1,000%. Okay, so and here I decided to put alongside the SWDA. In all actuality, this is the Swiss francs return of the SWDA, so the SSAC. The SSAC is the one traded on the Swiss Stock Exchange, but it's the same as the SWDA. It's tracking the MSCI World, so an equity ETF. 2020 did 4.5%. 2021, we already have an outperformance from the stock. Let's say a little bit what was here the claim. Claim was significantly outperforming other asset classes such as equities and bonds. Well, they don't say if it's supposed to outperform the asset classes every year, but well, at least for 2021, it didn't outperform. On the CAGR, it did outperform. Uh, and I would say also significantly. This is almost 3 times. But okay, 2022, it did a lot better than the equity. And then 2023, it did also a lot better than equities. And the first quarter of 2024, it did much worse. But okay, the CAGR of a traditional investment would be 7.9 over these years, and the product is 23.6%. This is actually a bit of a wrong comparison because in this instrument, as I said, we have commodities, currencies, and stocks, but the SWDA is only stocks. So it's really not the correct benchmark, but it was just a little bit to see the performances in relationship to something because they didn't provide any comparison to anything. But yeah, so then we have the chart here, the drawdowns. The drawdowns are not that bad. The maximum is about minus 10%. It's fine. But okay, here we have another statement. Past results are not an indicator of future returns. Basis of return strategy backtesting. Returns are stated after all fees. Okay, this is something that they have to write, but the important aspect is returns are stated after all fees. So this is net return. That just means that if we didn't have the 25% performance fee and the other fees, we would have a gross CAGR of about 31%. Now this becomes even a stronger claim. So we would need much less than 10 years to go from 100K to 1 million. So this is the claim just gets bigger and bigger, and I need more and more proof. And 4 years and a little bit it's not enough, unfortunately. Okay, let's go to this statement here. So here on the German version, let's also go a little bit further. Here we have, by investing in Smart Alpha, investors participate in a liquid CFD portfolio of long-short equities, foreign exchange and commodities managed by a risk-optimized trend-following trading strategy based on probabilities and statistics. So again, they are just saying again the things that they already said, but the important aspects is liquid CFD, who provides this liquidity, why you say that it's liquid. So we know that the CFDs are provided by Finalto, but what do they, what does it make it so that they are liquid? So usually when you trade CFDs, you only trade with one counterpart. So if you want to get out of the contract, you have to get out with the counterpart. So it's not like you can sell the contract to someone else. In theory, you probably could sell it to someone else, but that's not usually done. So you only have one counterpart, and I'm a little bit doubting this liquidity. So if the counterpart should not have the money at that moment, it just becomes either illiquid or the contract could suffer from being able to be repaid. So, and here we're not talking about a private investor using CFDs. We are talking about a manager, so a product manager, which should deal with a lot of money, I guess. But yeah. Okay, and then we have another statement, risk optimized. I want to know exactly what they mean by risk optimized, because again, what is the unit of measure when you talk about risk optimized? What are you optimizing for? And also, what is your target value when you are able to say, okay, this measure is now optimal? Because it's not given. I mean, you're saying me it's by risk optimized, but you don't tell me what is your measure of risk. Okay, could be volatility, but then how much volatility is optimal for you?
because for me it could be something else.
Okay, and then after risk optimized, we have trend following. That again means that they cannot make trades, or they cannot make a profit in stagnant markets or horizontal markets. And again, probabilities and statistics. But probabilities and statistics of what? Which sets of data? Which information? Does it find correlation with any type of information? So I would like to have more information on that. But yeah, these are just a lot of words that really don't say much that's really useful or meaningful. But okay, let's not be too harsh. I said I didn't want to be too harsh, but but yeah, in all reality, if I have to be honest, when I saw I was already a little bit skeptical because many people nowadays, just like it happened with cryptos, they put AI into anything. I'm not saying that AI is not useful. I use it every day, but you cannot just throw in AI and then expect people to throw money at you. I mean, maybe you can, because many people do throw their money at anything that has AI in its name, just like it happened with the dot com. But yeah, apart from that, I really try to be as critical as possible. As you can see, I try to read every single word. I try to give a meaning to every single word. I try to question every single word, and that's how you really analyze a trading product, an investment product. Sorry, because in your entire life, so maybe you have, I don't know, 50, 60, 70 years of life ahead of you, you will certainly incur in people that offer you financial products. And and you of course cannot make a decision just like that. You need to take the fact sheet, take the information, take the contracts, read them word by word, try to understand what every word means, if they have a meaning, what that word means for the investment, and how that investment will impact your portfolio. So let's go further. The AI strategy aims to achieve absolute returns regardless of market conditions. Just goes in contrast with trend following. Again, as I explained before, if it's trend following, by definition, it does not make money in a stagnant market. So regardless is a false, or if not false, at least misleading. It could be false depending on what they mean by trend following and what they mean by regardless of market conditions. So there is a lot of interpretation that could be done, but I would say from my point of view, it's at least misleading. Due to its low correlation to the overall market, again, the fact that it has a low correlation is not given. With these small information, I could say that it has a low correlation with an MSCI World Index, but here we talk about low correlation to the overall market. First of all, what is an overall market for you? If you don't define an investment universe, then what is your overall market? And then show me a correlation matrix with the overall market. Smart Alpha is AMC AI is an ideal addition to any conventional portfolio, and should reduce portfolio risk and lead to higher risk-adjusted returns. Okay, yeah, that just depends on my portfolio, so you cannot really make that statement. I mean, you can say, because you use the word should. What do they say in German? Dürfte das Portfoliorisiko verringern. Okay, dürfte, so should. Yeah, it's a correct word. I mean, should in theory should, but you don't know about my portfolio. So the last page is a little bit of legal information. Onvest AG acts as an asset manager of Smart Alpha AMC. So they manage the asset, but then I'm asking, what does it mean to be an issuer of the product? So I guess, yeah, probably they buy the product from Smart Alpha Ltd, and then they resell it repackaged in this form. Then I'm also in doubt whether or not what happened, because if they are the asset managers, then that also means that if they should go bankrupt, then I also lose my money. But no, because they probably only manage
the money that we would give to them. But then the contract is directly with Smart Alpha Ltd. Probably their assets are segregated. So yeah, probably it's like that. So it goes back to what I said before. The issuer is Smart Alpha Ltd. They just manage the assets, so the money, and they use it to invest in this product, but the product is there. If they should go bankrupt, the product is still there, and then probably it's they invested and the money is given back. Onvest is a Swiss-based, FINMA-regulated independent asset management company specializing in professional and institutional investors. Okay, whether it's FINMA regulated, Swiss based, it's not really relevant. We will see why later on. It's good that it's FINMA regulated, but for this product, it's not really meaningful. It's meaningful in the sense that it's your asset manager, so it should be regulated when you give money to them, but the product is not regulated. So you are giving money to someone that is regulated, but the money is then used to buy something that is unregulated. So yeah. Smart Alpha Ltd, by the way, as I said, it's a company that I couldn't find information on. So again, it's also not only the product itself is not regulated, probably, I'm not sure, but probably also Smart Alpha Ltd is not regulated at this point if I could not find any information. In addition to Smart Alpha, blah, 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 Onvest manages the financial products listed at smartalpha.ch. In addition to Smart Alpha AMC, Onvest manages the financial products listed at smartalpha.ch. When you go on this website, it just redirects to onvest.ch on the web page where they list all the Smart Alpha products. Registered assets of the product manager is Onvest AG, but there is no address or registration number given for the other firms involved. I'm talking about the Smart Markets GmbH, Smart Alpha Ltd, and Finalto Financial Services Ltd. Finalto Financial Services Ltd is kind of okay because I could find it on internet, but the other two I could not. So yeah. Regulatory supervisor is FinControl Suisse and of course the FINMA in Bern. So perfect, but FINMA only regulates Onvest AG, not the other firms involved. And remember, you also have relationships with the other firms. So with Smart Markets GmbH, they provide the strategy. Smart Alpha Ltd, they provide the issue, the contract. And then you also have Finalto Ltd that provides the CFDs with which the strategy is built on. So yeah, but as I said previously, Smart Markets GmbH does not seem to be regulated by anyone, even in Germany. I tried to look on their website if that company is the correct one, because I'm also not sure about that. And then no information found on Smart Alpha Ltd. The only found information is the commercial register of the UK that says it's been dissolved in 2019. Good. Then we have some advantages. An investment in Smart Alpha gives investors access to a proprietary long-short trading strategy based on probabilities and statistics. Again, something that they already said. The artificial intelligence-based algorithm of Smart Alpha AMC provides the ideal basis for replicating historical returns in the future. That's something already that they said, and I didn't find really nice to say. Smart Alpha AMC is aimed at investors who are prepared to take individual market risks in order to benefit from unique absolute returns opportunities. Okay. Smart Alpha AMC is aimed to investors who wish to invest in a financial product that offers the ability to achieve absolute returns regardless of market conditions. Also, these statements, I'm asking myself, who does not? What is the investor who would not like to make profits year over year without, regardless of the market conditions? But okay. Smart Alpha AMC ideally complements other products in the Smart Alpha family. So that just says buy more of our products. All assets of Smart Alpha AMC are held in a segregated accounts in regulated jurisdictions. Okay, that this segregated account, I'm guessing it's the Onvest company that as I said before, that segregates your assets when you invest. But again, then that money is used to buy the contract with Smart Alpha Ltd. And there is no segregation there. So if Smart Alpha Ltd goes bankrupt, it's not by definition it's not possible to segregate that those assets. You can only segregate the certificate that I buy by giving you the money. You cannot segregate the CFDs because this is not a fund that buys CFDs. So if it was a fund that would buy CFDs, then the CFDs would be segregated, but there is no stock segregated. So yeah, you segregate my assets against the bankruptcy of OnVest AG, not the bankruptcy of other institutions. And also another question would be what jurisdictions and why do you put jurisdictions in plural? Yeah, probably it's the Swiss jurisdiction, but why wouldn't you specify? But yeah, which significantly reduces the credit risk typically associated with structured products. But again, I would like, this is an important part, and they just spent a few words on this, and I would like to understand if you really have a system to lower the credit risk, please explain it to be more in detail. Because as I understand it, it's like I said, you give the money to OnVest AG, they buy the certificates of Smart Alpha Ltd, and then they segregate those certificates, which means if OnVest AG goes bankrupt, those certificates are yours. But then Smart Alpha Ltd cannot segregate anything because they make the contract. So, and then Smart Alpha AMC invests exclusively in liquid CFD products and therefore offers daily liquidity and immediate access. Again, give me a measure of liquidity. I could also say that, I don't know, Apple is liquid, but if I say that, I can go on the stock market and tell you how many trades there are per day, and then you can judge yourself if it's liquid or not. For example, this is very important if you invest in ETFs. For example, some ETFs are not liquid at all, and if you have a big portfolio and you need to invest a lot of money, then you have to understand what liquid means. For example, for me, it means about 10% daily transactions of my portfolio. So if there is transactions for a 10% of my portfolio on a certain asset, then it's relatively liquid for me. But yeah, or it could mean also if I want to buy an asset, let's say I want to buy 1,000 francs of an asset, I would like to see at least 10 times that amount of transactions per day. So I don't know, if I want to buy an ETF with 1,000 francs, I'm expecting to see at least 10,000 francs of exchange every day on average to say that that ETF is liquid enough for me. But yeah. Then risks, depending on the performance of the Smart Alpha AMC long-short portfolio, the repayment may be less than the invested capital. That just means you could make losses. Perfectly reasonable. Smart Alpha AMC invests in assets denominated in currencies that differ from the home currency of the fund. And that just tells me, okay, so the allocation is not 100% francs. It's just that the fund denomination is francs. But then what is the meaning of the chart that they showed before? It doesn't have much meaning to me. Exchange rates may have a negative impact. Of course they can. Then we have important regulatory information. We will not read everything. We will just read where I have the notes. Then here they say, OnVest, so the OnVest AG, has not verified and cannot guarantee the accuracy and completeness of the information presented. But the information provided is solely on the products itself. There is no information on any other product. There's no information on markets, other financial markets. There's no information on any assets. So how did they not? First of all, why do you say has not verified the information? It's okay that you cannot completely guarantee the information because you don't want to have that liability. But why do you say that you didn't verify? That just tells me, Oh, we sent this fact sheet, but we didn't verify if it was written correctly. Okay, but why didn't you verify? I mean, it's only your information. So, okay. And then here, this document has not been reviewed or approved by any regulatory authority. So that tells me that at this point, the FINMA regulation is really not that relevant anymore. It's only relevant because you give money to Uninvest, that it's good that it's regulated by FINMA. But yeah, the document in itself, it's not been reviewed. The products is, as we saw in the first page, is not regulated. So yeah, the regulation is a little bit there in the air at this point. And then here, they are intended exclusively for investors who have the necessary knowledge and experience to understand all the risks and benefits involved. That just goes back to also the intermediary structure. So one of the main risks is the intermediary structure. And then we have this aspect also. The value of the product depends not only on the performance of the underlying assets, but also on the credit worthiness of the issuer. This is another important aspect. Not only the problem is if the companies go bankrupt, but if they don't have any more credit worthiness, if they cannot repay your entire contract. Maybe they can repay only half of it because they don't have enough money, so they just don't repay the contract. So they could repay a part of the contract, they could repay a part of your contract, or they could repay your entire contract. But again, if the issuer should lose credit worthiness, you could have some problems. And then if you could sell this product. So we are talking about the creditworthiness both of Smart Alpha Ltd, which is the issuer of this product, and then the Finalto Financial Services, which is the provider of the CFDs. So let's say that Smart Alpha Ltd, the issuer of the product, lowers its creditworthiness, and there is a rumor that they could not pay back their products. It's really hard for you to resell this product. If you could resell it, I'm really not even sure if you could resell it to someone else. I guess you just ask you ask Smart Alpha Ltd on behalf. So you ask Onvest on behalf of you to ask Smart Alpha Ltd to give you back the money if they have the money, as I said before. But yeah, so that's about it. And then here we have some other things which you can read if you want. It's also written here in German. But yeah, here again, Onvest expressly points out that past returns are not indication of guarantee of future returns, but then they make a strong statement that the past returns could be expected also in the future. I mean, at least don't make that statement part of your marketing strategy. But yeah, so conclusions on this product. This is a very difficult product to understand. They don't tell you on what they invest. Of course, they don't tell you how they invest. It's just a contract. There is no underlying underneath this contract. The value is only based on what they tell you that the value is. Again, because you don't know what they buy and what they sell, at least not now. So it's really important to understand those risks. If we stretch our imaginations, it might as well be that they just say, you know what, the contract went to zero because they can actively manage the product. There is no way to prove what they bought and how that the buying of that product could have influenced the certificate, the AMC that you're buying. It's a really dangerous product. Of course, it's only for professional investors and for institutional investors. So if you are a private investor, you cannot even buy this. But it was just a nice exercise to do, I think, because it's so hard to go through this financial product, that if you can go through this financial product and if you went to this financial product with me, I think you are also now able to go through other simpler financial products. Maybe take an ETF and read the fact sheet, read the KID, so the key information, key information document, so KID. So try to read the fact sheet, the key of the ETF, and try to just go through all the words that they say, try to understand what they mean. Do some notes. It's also nice to write your notes, your what you're thinking, also what you are expecting to read afterwards. So if they make a claim, just say, okay, but I want to see a proof of that. So just try to do that. But yeah, I hope this was useful. If you want my opinion, if I was a professional investor, I would not buy this product because it's too dangerous, too risky, too difficult to understand. I would just not buy it. Yeah, I don't trust it. It's really murky. I don't understand the companies involved. It's really difficult. But again, I don't want to talk bad about this product. It's just one of many financial products that I encountered, and I wanted to talk about it. I'm sure it's perfectly fine, this product. I don't want to talk bad about it, but in my opinion, my personal opinion is just that I would not buy it. I hope you liked this video. If you did like it and if you found it useful, please leave it a like. Leave in the comment if someone else proposed to you a financial product. Maybe I could review it. Maybe, well, just tell me and then I can try at least to read it because I'm always interested to see new products. But yeah, again, if you like the video, leave it a like, and I'll see you guys in the next video.